Even if nobody buys the stock back from me ever, are your holdings going down every day? Do you think to yourself that this is it, this is the bottom, and tomorrow you find yourself a new bottom? In this video, I'm going to share with you how to deal with a downtrending market. Before everything, I have to say that I'm not a financial advisor and I'm just sharing my research and experience. When you do your own research before buying a stock, you know about the fundamentals of that stock. So when the stock price goes down without any changes in the fundamentals of that company, you will buy more shares and average down. However, if you buy a stock because of somebody else's opinion or somebody else is buying that stock, when that stock is falling, you don't know what's going on. You don't know if the fundamentals of that company has changed or not. So you will panic. You don't know what to do. You are looking for that guy to ask him, what to do now? Is anything happening? Is the stock good anymore? Is the stock bad? What to do? What to do? You have no idea what to do because you have no idea about the fundamentals of that company. When you don't know anything about the fundamentals of a company that you own and that stock is going down, you have no idea if the fundamentals are changing or not. So that's why I'm saying you have to do your own due diligence before buying a stock. I have a great example for you here to see what can really happen when somebody buys a stock without doing enough research, without doing their own due diligence. Graham and Stephen released this video titled, Why I'm Selling My Stocks. This is a good example of somebody buying stocks without doing enough research. Listen to this 30 seconds clip.
Second, we have C3 AI. Going into it, I felt like artificial intelligence had a lot of potential. And overall, I felt like this company would be a promising option for anyone looking to get into the space, both from an investment standpoint and for businesses who want to automate their services. But the moment I began buying it, it started to tank. Unfortunately, this was the perfect example of trying to catch a falling knife because I bought the dip and then it dipped more. And then I bought that dip and it dipped even more. And now I'm down 62% or $30,000.
Okay, now, what do you think about his investment? Why do you think he is closing a position after being 60% down on that position? What went wrong? This screenshot that you can see on the screen right now, this is more like the screenshots that you can find in Wall Street Bets. For us long-term investors and individual stock pickers, it is really almost impossible to be 60% down on a position because well, if the stock price is going down without any changes on the fundamentals of the company, we average down, so we can't be 60% down on a stock because we are buying that stock when the stock price is going down. And if we don't like the stock or the fundamentals have changed, as I said, we won't keep that stock, we will sell that stock. So we won't keep that stock while the stock is going down. So being 60% down on a stock, it is almost impossible for someone like me. Maybe once in every 5 years or 10 years, just like that. 60% down, I can't even be 60% down on a call option. So much for a stock. So that's what happens when somebody doesn't do enough research. When you see somebody 60% down on a position, be sure that they are doing something wrong. In a minute, I'm going to explain how you can avoid being caught in a situation like this. About that 30-second clip, it looks like he just bought that stock because of the idea behind that stock and he didn't value that company. It looks like that he didn't have enough knowledge about the fundamentals of the company because he didn't mention anything about the fundamentals in that video. And now that the stock is down, he's saying this.
Going into it, I felt like artificial intelligence had a lot of potential. But the moment I began buying it, it started to tank.
He felt like? Does it mean that the company doesn't have any potentials anymore? It seems like that he doesn't believe in the company and the fundamentals anymore only because the stock price is going down. What? Yeah, later he explains that he's selling this stock because of the reason called tax loss harvesting. But let's be honest, based on his attitude, I don't think he's buying this stock back in a month or two. This is just an example that I'm using here. Graham here is just an example to get to the point. When you don't know exactly what you're buying into, you won't know exactly what to do when the stock is going down. You won't know if the valuation was right. You won't know if the fundamentals have changed or not. You won't be able to know if the stock is cheap or expensive. And you won't have any idea that what the revenue numbers can potentially be in 3 to 5 years. This is not being an individual stock picker. This is just randomly buying stocks and making your portfolio like an ETF. Just buy an index fund or an ETF that is managed by people who know what they're doing. I want to add a quick note here. This video is not hammering Graham. He has 1,000 one more zero, more subscribers than me, and he is 90% older than me. So this is not about hammering Graham. I'm just using him as an example to get to the point. It doesn't make sense for him to be an individual stock picker when he can spend the time to make more videos instead. I would have done probably the same. However, I think I would have preferred index funds and ETFs if I were in his shoes. So what was the point of this video? The title was what to do when the stocks are falling. Well, here's what I would do. If I know everything about the fundamentals of the company, if I know that they are growing every year, if I trust the management team and I believe they are doing their best, if I know the industry and I know the industry is growing and in generally stuff like that, I'm going to average down. I'm going to buy more shares as the stock price is going down. I want to tell you something here. I don't give a shit what's happening with the stock price, especially when I don't have any more money to buy more shares. Yeah, if I have more money, I do like the stock price to go down. But sometimes you don't have that much cash on hand. So in that scenario, I don't give a shit what is happening with the stock price. If the fundamentals of a company isn't changing and the stock price, let's say, go to zero, but the company is still selling, for example, goods and they are generating revenue and net income and they are growing every year. So I'm not going to panic or I don't know, sell that stock for $0 or 25 cents. I'm not going to do that. Even if nobody buys the stock back from me ever, I'm going to hold that stock and that company is going to pay me dividends if they are making any money. So I don't care about the stock price. If the stock price goes down, great, I'll buy more shares. If the stock price goes up, I may sell depending on the circumstances. I know some people think that, yeah, if the stock price is down, they can't do anything with the company. Well, they still hold an asset. That asset is generating money. They can get dividends in the future if nobody wants to buy that company from them. So that's how I think about holding a company. I think about the dividends. If nobody buys the stock back from me, I'm going to get my dividends. We are holding an asset. We are not buying an art or, I don't know, a classic car or something like that. We are buying assets that are working and generating revenue and money. So I'm not afraid of holding an asset. I'm not afraid of holding an asset if I know what I'm holding. I know the valuation, I know the fundamentals. I'm not afraid if the stock price goes down. So what to do when the stocks go down? Do your own research before buying those stocks. That's my answer. That doesn't just apply to stocks. Due diligence doesn't just apply to stocks. It applies to real estate, I don't know, collections or crypto maybe, even Pokemon cards. You can't buy Pokemon cards without doing your own research. That's just silly. Always do your own due diligence before buying any asset or investment. Hope you got a lot of value. Be sure to check one of these videos on the side and subscribe if you like the content. See you with the next video.